Welcome back, everyone. Sean Stevens here again with Metroplex Mortgage Services and another USDA Loan Pro video quick tip. Do you know the answer to these frequently asked real estate commission questions? With the recent National Association of Realtors settlement reshaping how real estate commissions are handled, homebuyers, sellers, and agents are experiencing new dynamics in the real estate market. As a result, we have been fielding questions about how these changes impact both the mortgage process and the overall buying experience. In today's short video, I will walk you through 4 commonly asked questions we receive on real estate commissions from the mortgage perspective and help separate fact from fiction. But before we get started, don't forget to take advantage and download our newest loan comparison flyer with the link below. This free guide breaks down each program side by side, explains allowable seller concessions, and is a great resource for both homebuyers and realtors alike. First off, can real estate commissions be included with the USDA loan? And the answer is yes. Now, generally speaking, loan programs will not allow a home buyer to automatically roll in or include closing costs or real estate commissions as part of the loan amount. However, unlike FHA, VA, or conventional loans, in cases where the appraised value is higher than the sales price, a USDA loan can be increased up to that value and roll in reasonable and customary closing costs, which does include real estate commissions. But remember, this does not happen automatically, and it will depend on if the appraised value is higher than the sales price. Next, if a seller agrees to pay a home buyer's closing cost, can those seller concessions also be used to pay real estate commission? And the answer is once again yes. Seller concessions can be applied towards payment of real estate commissions along with any other reasonable and customary closing cost. We would not require anything additional to be written into the contract for this scenario, and it is best practice to provide all of your brokerage agreements to the lender and title company so they can properly draft all documents. Next, if a seller agrees to compensate buyer's broker, does this amount count against the maximum seller concession contribution limit? And the answer to this is no. A seller's agreement to compensate a buyer's broker does not count against the interested party contribution limit that a seller can provide. The maximum allowed seller concessions will vary based on the loan program. For example, 6% of the sales price for FHA and USDA loans. And lastly, do VA loans allow the veteran to pay buyer's broker compensation? And the answer is yes. VA published Circular 26-24-14, which authorized a temporary local variance to their long-standing prohibition. Effective August 10, 2024, veterans may now pay buyer broker compensation. With this important change, conventional FHA, USDA, and now VA all permit the home buyer to pay buyer broker compensation. In summary, the real estate commission structure is evolving, and buyers need to stay informed about how these changes affect their mortgage and home buying plans. Working closely with both a trusted mortgage lender and real estate agent will provide the guidance necessary to navigate this new landscape. Be sure to ask the right questions, review your budget, and consider all options available to make the most informed decision. As an FHA, VA, and USDA approved lender, we will walk you through the qualifying process step by step. Just call, text, or email to discuss your scenario and let us show you the Metroplex difference. I want to thank you again for forwarding and sharing today's video with any friends, family, co-workers, or clients who are looking to buy, sell, or refinance. As always, I want everyone to make it a great day and look forward to seeing you right here for the next tip of the week.